this is really a market on crack. So this is a really dangerous time again to be in the markets because something's going to happen.
In today's video, Harry Dent, author of 0 Hour, talks about what's up with bonds, the next moves of the Fed, the raging inflation and the coming recession. Dent has been predicting a great reset of the biggest financial asset bubble in history. The market historian predicted a painful crash in stocks and an economic depression, and discusses the next moves before the big crash. He believes that the top is in and the Fed is tightening aggressively. Could the markets make a new high?
I tell you, I usually think the smart money kind of know where the markets are going, but they fake along the way to keep flushing out the dumb money on both sides. I'm not sure the smart money even know what's going on here. The markets that are at a very, very pivotal point here. Again, had that first crash, which says bubble over, I mean, 90% of the time, that was good news to me. But now we've had a bounce. It's going 8-9 months, and longer than usual, but still hasn't violated the most important resistances. So it should be about to turn down. But the market doesn't seem to be that clear about it. Okay. So first of all, again, the first bounce after the 1929 crash, the first crash down 40-some%, similar to this, that was 5 months, okay, before that next wave turned down and really set in and said, oh, this is not a correction, this is a major crash. And that's what we need to see here. So again, it's very hard to interpret what's happening with the markets at this time. All I know is if they are going to turn down, which is still my favorite scenario, they need to do it soon, okay? 8 to 9 months in this bounce and a little less, it's more like 6 to 7 in the NASDAQ, but still, this is way longer than it normally should be. And it's now started, it went above the best place for the market to stop would have been the NASDAQ around 13,181. I just kind of gave an update to subscribers here recently saying, look, here is the resistance point. So we passed that, okay? Now the next one is just above where we are here today, okay? Just over 14,000 at 14,212. There's some strong resistance there. That's the most likely point that this rally is going to stop. At this point, and if it doesn't stop there, then I'm going to really start worrying about a new high for the first time. And then the last resistance point is at 14,647. If we get there, then a challenge to the old 16,212 high becomes a lot more likely. And again, there is no reason for this. We've had tightening since last March. The clear signal is that probably at least another 50 basis points, maybe 25, but at least more likely 50 basis points over the next few months. That's 550 basis points in tightening, the strongest they've had since the early 80s, okay? Into a market that I know has an economy underneath it, which is still fundamentally weak. Where we are in the baby bust downturn demographically is in kind of that last year period. 2022 to 23 should be the bottom naturally for the economy. And the first year, should be next year. 2024 should start the upturn in the millennial spending wave, which will be shorter and go into about 2037. So the economy's still weak underneath, okay? And so that's why the stimulus has been required and for so long. So this is a real test for the markets. If it's going to turn down and we're going to see this crash follow through and be what I've been expecting, the crash of a lifetime, something that should have happened originally on our natural cycles, all of those converged into late last year, late 2022. We should have seen this big crash from early 2020 into late 2022. But with all the stimulus, My view now is that central banks have pushed that forward, so now we have a credible top in late 2021 that should be crashing into mid to late 2024. And it does take 2.5 up to 3 years for a crash of this magnitude to really shake out all the debts and all of the overvaluation of stocks and stuff. So we really are at a critical point. And it is a great time. We've been telling people to get out on this bounce. This is a great time to get out. I mean, it's not that much upside with highs getting, the old highs getting closer here. It's way better to be out for more traders. This is a good time to short. The target I have for shorting here coming up, again, 14,212 on the NASDAQ. Again, we're very close to that. So that's a place that somebody wants to actually short, could actually take a position with a stop, just maybe 2-3% above that, because this third wave should be at least as big as the first wave, and I think larger. And in fact, you can look at any markets and see that the next real support for the stock market, if this does turn into that major crash, would be the COVID lows in late March 2020. Okay, that's down 50% or more in most indexes for Europe. So this is going to be a big wave to catch if you can catch it short for people who are traders. So again, this is last chance to get out. Look, if we can push through 14,212 and then again 14,647, which again I think is unlikely, then there's a chance we could make a new high here. I just think the odds are against that. I think the markets are already playing with fire here, having this sort of confidence after tightening for 15 months and another couple of months expected. In fact, the fact that this market, of course, it did go down, and part of this crash was anticipating this tightening and into the beginning of it. But for the market to rebound this much when they have continued to tighten and are still looking at going, this is really a market on crack. So this is a really dangerous time again to be in the markets. So again, I will keep you updated because something's going to happen decisive very soon here, it looks like to me. So again, stay tuned.